if you're investing, if I'm going to buy a half interest in a McDonald's stand and you're going to run it, or a McDonald's franchise, you're going to run it, I look to the business to determine whether I've made a good investment. And I'm concerned about, whether we have new competition, how we do over the years. But it's the business I look at. When you're just looking at the price of something, you're not investing. I mean, if you buy something, Bitcoin, for example, or some cryptocurrency, you're not looking to the asset itself to produce anything. If you buy an apartment house, you're looking at how the apartment house does. If you buy a farm, you're looking at the farm does. If you buy a whole business, you're looking at how the business does. If you buy a part of a business, why shouldn't you look at how the business is going to do? Some people should not own stocks at all because they just get too upset with price fluctuations. People would rather gamble. I mean, the idea that you can double your money in 6 months, that's just going to, it's why people go to the races, why they go to Vegas, whatever it may be. They even know the odds are against them, and they still do it. I mean, it's a strong instinct to want to get rich fast. And I don't know how to do it. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock?
Yeah, selling a stock because it goes down. I mean, if you buy your house at $20,000 and somebody comes along next day and says, "I'll pay you 15," you don't sell it because the quote's 15. You look at the house or whatever it may be. But some people are not actually emotionally or psychologically fit to own stocks. But I think more of them would be if you get educated on what you're really buying, which is part of a business. And the longer you hold stocks, the less risky they become. Whereas the longer the maturity of a bond, the more risky it becomes. So you get a bargain as an investor compared to what I can get in terms of buying the whole business. And people, if they just think of stocks as pieces of business, they'd be so much better off than thinking of them as little things that move around in price.
Because there have been a lot of people recently who have raised questions about the stock market, who have worried that it is a fool's game to try and get involved, that the average investor can't get a fair shake. I've heard people like Bill O'Reilly say this very recently, that he doesn't trust the stock market and thinks it's rigged. What do you tell people?
Well, it isn't rigged at all. I mean, there have been occasions when given stocks perhaps have been rigged, but it's pretty hard to rig $20+ trillion. I mean, and people should forget about it, calling it the stock market even. I mean, it's American business. And if for some reason you think American business over the next 50 years is likely to be way less productive than it has been in the past, then you could come to a negative conclusion.
When people start to think, well, this could be the beginning of something really bad, it could be even a World War III situation, it could be a return to the Cold War, does any of that ever go through your mind?
Well, if you tell me all of that's going to happen, I will still be buying the stock. You're going to invest your money in something over time. The one thing you could be quite sure of is if we went into some very major war, the value of money would go down. I mean, that's happened in virtually every war that I'm aware of. So the last thing you'd want to do is hold money during a war. And you might want to own a farm, you might want to own an apartment house, you might want to own securities. But I mean, during World War II, the stock market advanced, and the stock market's going to advance over time. American businesses are going to be worth more money. Now, dollars are going to be worth less, so that money won't buy you quite as much. But you're going to be a lot better off owning productive assets over the next 50 years than you will be owning pieces of paper, or I'm going to throw in bitcoins. You can have a great lifelong experience in stocks and really not be a specialist in accounting or know all the ins and outs of capital structures and all of that sort of thing. And I was probably more ignorant of the realities of farming, the realities of that building in New York than most people are of stocks. And yet it was perfectly possible to come to an intelligent decision that you could not lose money in those investments and that you were probably going to make quite a bit of money. I've been buying businesses and stocks for a lot of years, stocks for 71 years and businesses for almost as long. And I've never really made a decision based on macro factors. If I find a business I like, I buy it. I mean, the first stock I bought was in the spring of 1942, and I will tell you the macro factors were not looking good. We were, it was right after Pearl Harbor, and we were getting clobbered in the South Pacific, and the war did not look good. Now, I think almost every American thought we were going to win the war. But when I bought my first stock, I went in 100%. I spent all my $120. I was not doing it based on headlines. I was doing it based on what I was getting for my money. If you bought the house next to you to rent to somebody, you'd look at the rent you were going to get, the taxes you were going to pay, and what you thought the neighborhood would do over a long period of time. And then you'd measure that against the purchase price. The purchase price is all important. And the stock market just offers you so many opportunities, thousands and thousands of different businesses. You don't have to be an expert on every one of them. You don't have to be an expert on 10% of them even. You just have to have some conviction that either a given company or a group of companies, and I would suggest for most people it should be a group of companies, you have to have a conviction that those companies are likely to earn more money 5 or 10 or 20 years from now than they're earning now. And that is not a difficult decision to come to.
You specifically said a Vanguard index, which caught my attention.
Yeah, well, it's a very, very low-cost index fund. And there are others, but there are others that aren't so low cost. And keeping costs to a minimum is enormously important in investing, whether it's farms or buildings in New York, but particularly in stocks. I mean, if you're in effect paying out 1 or 2% annually of your portfolio, that's a big, big tax that you don't have to pay. Charlie Munger, my partner, and I, in 54 years now, we've never made a decision based on an economic prediction. We make business predictions about what individual businesses will do over time, and we compare that to what we have to pay for them. But we have never said yes to something because we thought the economy was going to do well in the next year or 2 years, and we've never said no to anything because we were right in the middle of a panic even if the price was right. If you buy a business, if you buy a farm, you go up and look every couple of weeks to see how far the corn is up, and you worry too much about whether somebody says this is going to be a year of low prices because exports are being affected or anything like that. You buy a farm and you hold it for, I've got one farm that I bought in the 1980s and my son runs it, but I've been there once, I mean, it doesn't grow faster if I go and stare at it, I can't cheer for it, more effort or something like that. And I know there's going to be some years when prices are going to be good and some when the prices aren't going to be good. I know there's years when yields will be better than others, but I bought the farm. And if it just doesn't, I don't care about economic predictions on it or anything of the sort. I do care that over the years it's well tended to in terms of rotating crops, and I hope yields get better. And the truth is, you've got to expect good times and bad times in business. And if you were to buy an auto dealership and you're, wherever you live locally, or a McDonald's franchise or anything like that, you wouldn't try and time the purchase. You'd try and make the right purchase at the right price, and you want to be sure you got a good business. But you wouldn't say, I'm going to buy it because growth this year is going to be 3% instead of 2.8% or something.